Good morning, Mr. Himal.
Good morning, madam.
Very good morning to you all, my dear students.
Good morning, ma'am.
Good morning, ma'am.
Yeah. So, first of all, I must inform you that we highly appreciate your live lecture participation because I have noticed that for the finance course module as very few number of students were joined with the live sessions. Please inform other colleagues as well. As much as possible, join with the live sessions. Okay. So with that, I would like to welcome you all to the second session of the business reporting course module under the accounting stream. So today the session will be conducted by Mr. Himal Muthanayaka. Let me introduce him to the session. Mr. Himal Muthanayaka is a lecturer attached to the Department of Accountancy. He completed his Master of Business Administration from Postgraduate Institute of Management, University of Sri Jayawardhanapura. He also an associate member of the Chartered Institute of Management Accountants UK. And also he's a finalist at the TS Sri Lanka. He's about to complete his Chartered Accountancy examinations. Further, Mr. Himal is a member of the Association of Certified Fraud Examiners USA. So previously he was served as associate consultant in KPMG Sri Lanka before joining with the Department of Accountancy. So with that brief introduction, let me welcome Mr. Himal Muthanayaka to the session. Over to you, Mr. Himal.
Okay, thank you, madam, for the brief introduction. So, good morning, everyone. Good morning, my dear learning partners. Good morning.
Good morning, sir.
Good morning, sir.
So, today, what we are going to discuss is a very important topic in your course outline, which is preparation of consolidation accounts. So, before moving to the lecture, so I want to highlight some of the few important points because when we learning the consolidation, it is kind of a continuous process. So you have to participate with the lectures, or you need to listen or you need to prepare with the lectures, because it is interconnected to each lecture. So you have to at least participate, or you need to listen to the lectures before coming to the next lecture. So that is kind of a highlighting point before starting the consolidation lectures, because if you miss one lecture, in the next lecture I'm continuing from the previous lecture. So you have to continuously participate with the lectures, right? So that is what I want to highlight at the beginning. Okay, so moving towards to the today's session. So I will share my screen. Right. I think all you can see my screen. Yes or no?
Yes.
Okay, thank you. So, right. So here what we are learning is kind of investment. So how we are going to account for the investments. So I will start in a very simple way, because I thought that I think most of you have kind of a accounting background and some of you don't have that. And also if you are having some accounting background and this area, the investment or the consolidation area, some of you don't have much thorough on this area. So therefore, I'm starting from very basics and I'm moving towards to some complex calculation at the latter part of the discussion, because I'm having, I think, 4 to 5 lectures. So I will continue in these 4 to 5 lectures by starting from the simple beginning, and I will moving towards to the some of the tough situation when it's come to the consolidation, right? So with that note, I will first we have to know how we are going to account for the investment and what kind of the investment we are going to learn, right? So when it's come to the investment, right, we are talking about the groups, we are talking about the parent, we are talking about the subsidiary, we are talking about the associates, right? So these words, some of you have already know, and some of you don't have much familiar with these words, right? So don't worry, let's look at this, right? So when we're looking at a company A, right, you can see in this slide, you can look at, when you're looking at the company A, it is a kind of a one particular organization who is performing, let's say, manufacturing business. Company A is doing a manufacturing business, right? Manufacturing business, right? But now, company A is moving, supposed to move in towards to different sort of companies in every part of the world. He is going to acquire some firms in China, firms in Germany, firms in UK. Likewise, uh, the company A management is going to do some businesses in every part of the world, right? And therefore, they are going to acquire companies in this part of the world, right? And then now the company A has some sort of other companies, right? So these companies we called the subsidiary companies, right? The subsidiary companies, right? Subsidiary companies. I will teach you how to decide the subsidiary and associates, those things, right? For now, just remember these companies are the subsidiary companies, right? And my company A, who is holding the shares of these companies, we call it as holding company, or we can call it as parent company, right? Parent company. So if you get these all the companies together, we call it as group, right? If we take these circle, we call it as group, right? Right. So basically, why we need groups? Why we need groups? Why this company is trying to expand his business in every part of the world? What is the reason? Anyone knows? Why? Why? Yes? Yes? Spread the risk? Yes. Kind of. Yeah. Any other reasons? So some of you have said that spread the risk. Why we need groups?
Development.
Sorry? I didn't get you.
Business development.
Yeah, kind of. Business development. Yeah. So basically, why we are doing this, why we are having groups is we need to grow our business. Like you said, the develop our business. The correct word is growth, right? You need to grow the business, so you make groups, right? And also some legal reasons, some tax purposes, I will teach them in the latter part of the discussion. But the basic requirement is we are trying to get groups, right? Because we are focusing on the business growth, right? So therefore, if we are having such kind of a group, right, there's a requirement in the accounting. We need to consolidate those all the companies together, right? You need to prepare a one financial statement to all these groups, right? That we called it as consolidation accounts, right? That we call it as consolidation accounts, right? So today we are beginning to learn how to prepare a one financial statement for all of these companies, or we can say for this group, right? For this group, right? So moving on, so when it comes to preparation of consolidation accounts, or we can say a group account, right? So we need to go through a few accounting standards, right? So this is in the international accounting standard format. So it is the same as in the Sri Lankan accounting standard, right? We call it as SLFRS and LKSs. In international version, it is IASs and IFRSs, right? So LKS 27, sorry, LKS 27 is separate financial statement. It providing the guideline to presenting the separate financial statements. And LKS 28, which is talking about the investment in associate. Don't worry about these words. I will explain, right? It's talk about investment in associate. It's talk about the accounting for associate and how to follow the equity method. And most importantly, these two standards are more important when it comes to the consolidation accounts. SLFRS 3, SLFRS 3, or we can say in the international version, it is IFRS 3, business combination, and SLFRS 10 or IFRS 10, consolidated financial statements, right? So we are starting from this standard and moving towards to this standard and the distance standard. And also we are having IFRS 11 or SLFRS 11 joint arrangement. We are talking that in the latter part of the discussion at the last lecture, I will discuss about the joint ventures and the joint operations. And as you know, in every standard, we need to disclose something, right? Disclose to the stakeholders. That guidelines are provided in the IFRS 12, or we can say SLFRS 12, right? So these all the standards you have to learn in the preparation of consolidation accounts lectures, right? So I will go one by one, right? So you can learn these standards, and you can, I think at the end of the 5 session, you all can prepare the consolidation accounts, right? So this is the base for our construction project, right? Because everyone knows we need to have a good base to build a good building, right? So now we are building consolidation accounts, right? So this is the base, right? This is kind of a basement to your consolidation account. So this is what you need to learn, right? So any questions before moving to the hard part? Any questions? Okay, good. So moving on, I will go for the notes, right? So when it comes to consolidation, I'm not using the PowerPoint slide, because when it comes to consolidation, you know, there are very difficult to do as in the online as well, in online format as well, because we have to prepare the accounts, right? So I'm using a Word document, right, to conduct or to deliver the lectures, right? Right. I hope everyone can see my screen. Yes? Yes or no?
Yes.
sir.
Okay, thank you. So your participation and your active participation is very much important, because this is kind of a discussion, not like a lecture, common lecture, because we can exchange our knowledge, right? So everyone can talk, right? Right. So as I know, in this course unit, we are learning how to account for the investments, right? How to account for the investments. So when it's come to the investments are actually connected to the particular person and also connect to the particular companies. For example, I can invest in the fixed deposit, right? That is kind of an investment, right? And also the company can invest in the fixed deposit, right? That is also kind of an investment, right? But here, what we are learning is a kind of a very tough part of the investment when it's come to the particularly in part of the companies, right? Okay. For example, let's say I'm having a farm shop, right? I'm having a farm shop, right? So when it's come to this farm shop, so what I'm doing is I'm selling some eggs, some kind of a meats, likewise, right? So I'm buying those meats and eggs from the farmers, right? the farmers, right? So when it's come to this business, so I'm earning high number of profit, right? High number of profit, right? For example, so as you know, now the Sri Lanka is an kind of a recession, no? The higher inflation now it is actually controlled, but we are in kind of a higher inflation situation, right? And when we are looking at the businesses in Sri Lanka, most of the Sri Lankan businessmen actually uh, very much. I think I am telling that not all, but almost all. It's not uh, ethical businessmen, right? Because for a මේකට අපි කියනවා නිකන් සාමාන්‍ය බොරදිය මාළු බානවා කියලා, right? අපි දැන් මේ වගේ රෙසිෂන්ස් අවස්ථාවක නැත්නම් ඉන්ෆ්ලේෂන් එකක් තියෙද්දි බිස්නස්මන්ලා පුළුවන් තරම් try කරන්නේ ඒගොල්ලොන්ගේ profit එක වැඩි කරගන්න, right? So when it comes to the eggs, you can see, right, the eggs prices of the eggs are going very high, right? Likewise, they are earning so much of profit. So let's say this farm shop also earn higher number of profits, right? So now this owner of this farm shop is going to expand his business. How you can expand this business? What are the ways? How we can do?
Open
Yes.
a new shop.
Yes.
Open another shop.
Yeah. Open another shop. Right. Let's say open a new outlet. Right. Right. Yes. Any other things?
Amalgamate with another farm shop.
Amalgamate with another farm shop. Amalgamation. Yes. Yes. Anything
Acquire
else?
another.
Yeah.
Acquire the farmers.
Yeah. You can get some farmers kind of shops, right? You can acquire.
Enhance services.
Enhance services in the sense, what kind of services?
Home delivery, online
Yeah,
platform.
delivery. Yeah, you can do a delivery. Expansion of your services. Yes. Any other things?
Improve marketing.
Improve marketing. It's kind of yeah.
Like social media, using
Yeah,
social media.
it's kind of not expansion. I'm asking the business expansion, not like the strategies, like the physically how you can expand the business. Yes. Think out of the box and
Mitigated logistic function.
yes, very good. So you can acquire a logistic company, right? Basically, delivery. You
Yes,
can
delivery and-
acquire delivery company. Yeah, very good. Then you can do some like you can sell some seafoods, right? Related products you can do. Is it right? So you can do some related products, right? Likewise, you can expand the business, right? You can expand the business. For example, let's say some of you have said you can increase the home delivery, right? You can implement the home delivery thing, right? So you need to have some vans, some refrigerators, some cooling things, right? Because you need to deliver this meats and all, no, right? So therefore, some of you need to get some assets, right? Right. And when you are going to open up outlet, it will increase your assets, right? So when it's come to the investment for the assets, right, or investment for the financial assets, right? Let's say I'm going to get a fixed deposit. I'm going to do open a new outlet, right? So these things will govern in different accounting standards. When it comes to the assets, LKS 16 is implemented. When it comes to the financial assets, we want to study the SLFRS 9 financial instrument, right? In here, what we are discussing here is we are discussing here about the investment in other businesses. Or we basically we are acquiring some shares of other business. Like some of you have said that you are going to acquire a delivery company, acquire amalgamate a farm shop, another farm shop. Likewise, you are acquiring a shares of another company, right? Such kind of investment we are discussing here under consolidations, right? So that is the major difference, right? If you are going to invest in the financial assets like fixed deposits, right? It is governed by the SLFRS 9. If you are going to invest in the assets like PPE or let's say land or the vehicle, right? It's governed by the LKS 16. But if you are going to invest in a company, like you are going to buy some equity shares of a company or you are going to amalgamate, you are getting to acquire some of the companies, you need to learn how to do the consolidation for those companies. And you need to follow the SLFRS 3, SLFRS 10 and LKS 27, 28, those standards we have discussed previously, right? So that is the main difference you need to learn. So here what we are discussing is accounting for investment when we are acquiring some equity shares of another company, or basically when we are acquiring another company, right? Is it clear? Is it clear? Yes? Okay, fine. Right. So that is the first thing you need to learn, right? Here, what we are doing is we are looking at the accounting for the investment when we are buying some equity shares or when we are buying a company for our business purposes, right? So when we are buying a company, there are kind of different types of ways, right? For example, let's say I'm having a company called A and I'm buying the company called B, right? So we can continue as AB, right? We can continue as AB, right? The merge these two companies, right? For example, we can say SLT Mobitel, right? The previously we are having Mobitel and Mobitel and SLT got together. Now we are having SLT Mobitel, right? And then we have company A and we are buying the company B. And these two companies can do their business with another type of name, another name, right? Previously, we are having the Asian Alliance, I think the insurance company, now they are having SoftLogic, right? Right? SoftLogic, name of the SoftLogic, right? And we also can do A and B again. We can work separately. Yes, we merge, but no one knows we merge, right? We work separately. Like, for example, when you're looking at the John Kills Holdings, the Union Assurance is the subsidiary of the John Kills Holdings, right? So they are separately working, right? Likewise, these mergers and acquisitions can be happen, right? Can be happen, right? So when it's come to the accounting for the investments, right? So different type of investment we can do, right? Different type of investment we can do, right? The first one is investment in associate, right? Investment in associate, right? So what do you mean by the associate? Basically, if an investor hold directly or indirectly 20% of the voting shares or voting rights of an entity, then it is normally considered an associate entity and it is accounted for in accordance with LKS 28 investment in associates, right? So when it comes to the associate companies, right? It says if you have a significant influence over the other entity, we can call it as the associate company, right? So what you mean by the significant influence is power to participate in financial and operating policy decision of the entity, but is not control over those policies, right? Right. අපි associate company එකක් decide කරද්දී, right? පළවෙනි requirement එක තමයි අපි basic requirement එක තමයි more than 20% shares, voting shares. If we having more than 20% voting shares, we can say it is our associate company, right? And also we need to look at whether that company can make a significant influence over other entity. That means you are having a kind of a power to participate. Very important. Power to participate, right? Only participate, right? Power to participate in financial and operating policy decisions, right? Power to participate, right? Right? Remember, if it is associate, you only having the power to participate the financial and operating policy decisions, right? You don't have the power to control those policies, right? So in the undergraduate level, what I'm saying to my students is, when it's come to the associate, it's kind of a love affair, right? Right. So you do have kind of a significant influence, right? You can say, let's not go for the lectures today, right? You are having kind of power to participate the decisions, right? But you can't control the decisions, right? Right. It's kind of a love affair, right? So you are having some associate with that company, right? Associate with that company. So the points are, if you're having a more than 20% of voting rights, and it will make kind of a significant influence, you are having a kind of a significant influence over the other company, right? Then we call it as associate company. Let's say I am the acquirer, right? I'm acquiring the company B 20% of shares, right? So now I'm having kind of a power to participate with the financial and operating policy decisions, right? මට මොනවා හරි කියන්න පුළුවන් financial decisions වලට, right? මට කියන්න පුළුවන් මේ දේවල් කරන්න, but I can't control, right? Right. මේ වගේ financial decisions ගන්න කියලා company suggest කරන්න පුළුවන්, but I can't control because that is my associate company, right? Right. So these are the ways that it's provide some evidence of the significant influence, right? Representation on the board of directors. If you're having a more than 20%, then you can go for the board of directors. Participation in policy making processes, material transaction between the investors and the entity, interchange of the managerial personnel, provision of essential technical information, right? So those kind of relationship is there. Then we can say the company have a significant influence over other company, that makes an associate relationship, right? So this 20% is only a kind of a deciding factor, but the major thing you need to look at is whether that company have a significant influence over other company. For example, let's say you only having 10%, right? But you are having some material transaction with the investor, right? So therefore you can do some significant influence, right? For example, මම තමයි ඒ company material provide කරන්නේ, right? මට 10% තිබ්බත් මට ඕන material stop කරොත් ඒ company කඩන් වැටෙනවා, right? Right. So I can do some significant influence to the company, right? So therefore, if I can do the significant influence is if I can power to participate with the financial and operating policy decision making, right? But I can't control them. We call that relationship as the parent associate relationship, right? parent associate relationship, right? So one way we can invest in a company is investment in associates, right? Right? Investment in associate. Got it? Any questions? Right. I will answer that question in this come latter part, right? Some of you have asked some questions, right? So then I'm moving on to the investment in joint ventures, right? So this one I will discuss in the latter part of the, I think, fifth or in the last lecture when it's come to consolidation. I will discuss about the investment in joint ventures, right? So basically, I will provide some guidelines how we decide joint ventures, where an entity into an agreement whereby the control over an economic activity is shared, right? Control over an economy activity is shared. For example, so in the highway, you can see in the Baddegama exit, there is a rest area in the Baddegama or somewhere in the called Colombo Highway, right? So that is jointly controlled by the Sri Lankan Insurance and one of the another company, I can't remember the name, right? So they are jointly control this activity, the rest area, they are jointly controlled, right? Right. So those kind of companies, we call it as joint operation companies, right? Right. Right. And also you are having joint ventures, right? When it's come to the joint arrangement under SLFRS 11, right? We are having two companies, two kind of a joint arrangement, joint operations and joint ventures, right? Which will discuss in the latter part of the discussion, right? So the another way we can do the investment for the companies is investment in joint ventures. So we have learned two things. You can do the investment in associate and you can do the investment in joint arrangement, right? Basically the joint arrangement. When it's come to joint arrangement, it will divide it into joint operation and the joint ventures, right? So these are the two minor parts. So now we are moving on to the very important area. So this is the most important area when it comes to the consolidation accounts, right? Investment in subsidiaries, right? Investment in subsidiaries. So when we're learning this topic, we need to go through the SLFRS 3, SLFRS 10 standards, right? So what do you mean by a subsidiary and what do you mean by a parent? What do you mean by a group? And what do you mean by the consolidation financial statements, you will understand, right? So I will discuss when we discussing about the concepts, right? So for now, just remember, we can do the investment in subsidiary, right? And other investments, right? Other investment under SLFRS 9, we can do the financial asset investment, right? Guys, you can do some equity investments. So those things are covered in the SLFRS 9. I will take it as a separate standard. It is not actually incorporated to the consolidation ones, right? So now you understood that you can do the investment in different parts, right? You can do the investment in associate, you can do the investment in joint arrangement, and you can do the investment in subsidiaries, and you can do the other investments, right? Other investments, right? So moving on. So this is the topic for today, right? So from this part, we will start the today's topic, investment in subsidiaries, right? I told you that you need to learn SLFRS 3 and 10 when you are learning the investment in subsidiaries, right? Investment in subsidiaries. So before moving to the consolidation accounts, the primary job of you need to decide whether this company is your subsidiary company or this company is your associate company or this company is your joint venture company or this is kind of other investment. So these things you need to decide. Otherwise, what will happen? So your accounting treatment may be vary with the different kind of investment. right? For example, when it's come to the investment in associate, it is governed by the LKS 28, right? When it's come to the joint arrangement, it is governed by the SLFRS 11. The requirement is in the SLFRS 11, right? When it's come to the investment in subsidiaries, you need to follow SLFRS 3 and 10. When it's come to the other investment like financial assets investment, you need to follow the SLFRS 9. So therefore, if you not decide the correct version of the investment, your accounting treatment will be wrong. So therefore, you need to decide whether this is the subsidiary, whether this is an associate, whether this is a joint arrangement at the beginning, right? At the beginning. So how you can decide? It is very hard to decide, right? When it's come to the practical scenarios, like when we are doing the JKH audit, right? It is very difficult to decide whether this company is your subsidiary, whether this company is a related party company. It is very difficult to decide. But the concept is this, right? The concepts of control, right? So when we learn the associate, අපි associate ඉගෙන ගත්තා significant influence එකක් තියෙනවා නම් we called it as associate. But when it's come to the subsidiary, we are learning the concepts of control. When it's come to the associate, we learn that we are only having the power to participate with the decisions, right? Financial and other policy making decisions. But when it's come to the subsidiary, you are having a controlling power. You are having the controlling power, right? You can say control is the power to govern, right? Power to govern the financial and operating policies of an entity so as to obtain benefit from its activity, right? Right. So now you have a power to govern. So when it comes to subsidiary in undergraduate level, I'm teaching that this is kind of a marriage, right? So you are having a power to control your spouse, right? Right. Power to control your spouse. Not like love affair. In a love affair, you are having a kind of an associate relationship. But when it comes to marriage, you are having a power to govern, right? So investment in subsidiary, we can call it as a kind of a marriage, right? You marry with some company, then you can power to govern the financial and the operating policies of that entity, right? So how we can decide this control thing? It is very important, right? The control is presumed to exist in following circumstances. Very important to remember this, right? When the parent owns directly or indirectly through a subsidiary more than one half of the voting power of an enterprise. So that means if you are having, let's say I'm the company A, I'm going to acquire company B, right? I'm acquiring 51% of shares of company B. So then I can control the company B. I can control the company B, right? Is it clear? Is it clear? The first point? Clear? Yes?
Yes, sir.
Okay. So then this 50% is only a one factor, and there are different other factors as well. And also the control also exists when parent owns one half or less of the voting power of an enterprise, when there is, right? Look, let's say if we can directly say, if you are having more than 50% of share of another company, we can say you can control that company. And the next point is, if you don't have more than 50% of shares, still the control can be exist, right? The control can be exist because of these reasons, right? If you are having a power over more than one half of the voting rights by virtue of an agreement with other investors, right? With the agreement, you are having a more than 50%, right? 50% of the voting rights. So then we can say you are having the control over that company. Power to govern, the next point, power to govern the financial and operating policies of the enterprise under a statute or an agreement, right? In the according to the law or with the agreement, you have the power to govern the financial and operating decisions, right? Then you can call it as a subsidiary company because you can control the financial and operating policies. And the third point, power to appoint or remove the majority of the members of the board of directors or equivalent governing body. So if you can remove or appoint the majority of members of the board of directors, right? So then you are having a power over that company, right? So make sure when you're answering to a question, if your let's say if your company has only 40% of voting rights, you have acquired only 40% of voting rights, but still the control can be there, right? Because of these reasons, right? So remember how we can decide it is associate and how we can decide it is subsidiary, not looking at the voting shares. Voting shares is a one thing, but you have to look at other aspects as well. The thing you need to look at is when it is associate, you only having a significant influence. That means you can only participate, right? Only participate. But when it comes to the subsidiary, when it comes to associate, you are participating with the decisions. When it comes to the subsidiary, you are actually power to control the decisions, right? Associate, you are participating. Subsidiary, you are control, right? So that is the difference, right? So when it comes to the subsidiary, right, parent relationship, parent subsidiary relationship, as I mentioned before, it is kind of a marriage, no, right? So now you are marrying with, or you are married with some other company, right? So now you are become a one group. So you need to prepare a separate financial statement, right? A separate financial statement. And also you need to prepare a group financial statements, right? You need to prepare 3 financial statements, right? You are the company A, you are the company B. This is the company B. You are acquiring 50% of company B. So you will need to prepare the financial statement for the company A. You need to prepare the financial statement for the company B. And you need to prepare a financial statement for the group, right? So this is the responsibility of preparing the group accounts is with the holding company or the parent company, right? Parent company, right? Any questions up to now? Any questions? Any questions? So someone asked the 20% is the minimum right and the maximum will be 50. Yeah, that's correct. When it's come to the associate. Yeah. Any questions? No questions? You got my points? Yes? Yes or no?
Yes, sir.
So I hope all clear. Let's say it's clear or not. Right? Let's see. So there are a few questions to you. So I will erase this first, then moving on to the questions. That's the erase. Right. There are a few examples. So I will get these, right? These. Right. So there are 4 examples. So I'm hoping all of you will answer these examples. So you can put example 1, it is control or not, right? Yes or no. Example 2, yes or no. Example 3, yes or no. Example 4, yes or no. Whether the control exists or not, right? So I will give you around 5 minutes, 5 to 7 minutes, right? So let's try. You can post your answers in the chat box, so then I can see whether you have understood or not. Right. So there are more than 40 participants. You can put your answers, right? Then I can understand whether you have understood or not. Right. So much of answers. Very good. Yes, yes, no, no. Can control, can control. The first one, no. Subsidiary, yes. No, yes, yes. Can control, can't control. Yeah. Most of you have got some correct answers, right? So the example number 1, Carmart is a car manufacturer who acquires 52% of the ordinary shares in Tire Mart. Voting shares of Tire Mart are associated with the ordinary shares, right? So this is the basic concept, right? So if you got wrong this, so that you need to think again, right? Because I told you, if the one company holds more than 50% of the voting shares of another company, it's built a parent subsidiary relationship, right? Parent subsidiary relationship, more than 50%, right? So here you are having 52%. That means the car mart can control the tire mart. That means we are having the parent subsidiary relationship. That means you need to prepare the consolidation financial statements, right? You need to prepare the consolidation financial statements, right? Example number 2, control or not. The car mart owns 40% of the ordinary shares in the tire mart, associated with the voting rights. On top of that, car mart has the power to appoint, remunerate, and dismiss key management personnel (KMP) of tire marts based on the contractual agreement. Each of other shareholders hold maximum of 1% of shares issued by the tire mart. Right. In this case, as we discussed, we only having a 40% of ordinary shares. When you're looking at the basic concept of the control, they don't have the control because they are only having 40% of control. But the car mart can appoint, car mart can remunerate, car mart can dismiss the key management persons of the tire mart. And also other shareholders hold maximum of 1% of shares. So that means even though you only having a 40%, right, you are having a control by the agreement, right? So therefore, this company also having a parent subsidiary relationship. That means you need to prepare the consolidation accounts, right? You need to prepare the consolidation accounts. So that is why you need to decide whether this company have control over other company. Based on that only, you are deciding whether you are preparing consolidation accounts or not, right? That is why I'm telling that this is the basic part when you are going to prepare the consolidation accounts. So first thing you need to decide when you are preparing the consolidation accounts, you need to decide whether this company have a control over other company. Then only we are preparing the consolidation accounts. So that is why we are learning the concepts of control, right? Is it clear? Clear? Yes? Yes? Yes or no?
Yes, yes.
Okay, good. The third point, so now it is getting much tougher, right? So think about the practical scenarios. When it comes to practical scenarios, we are having so much of companies, right? So when we are preparing the consolidation financial statements, we need to decide whether that company have a controlling power or not. Right? For example, when you're preparing the JKH Group Holdings consolidation accounts, they are having the Union Assurance, they are having the Cinnamon Group, they are having the Browns Group, right? So different groups get together, right? So it is very hard to do the consolidation accounts for the JKH Holding Group, right? because you need to decide, the first thing you need to decide whether this company have control over other company. Then only we are preparing the consolidation accounts. Okay. Look at example number three. Carmart owns 40% of the ordinary shares in Tire Mart associated with voting rights. No other contractual agreement related to decision making are in place. Two other shareholders each hold 30% in Tire Mart. Whether you are having a control or not. Yes? Control or not? Yes? Control yathino nadda?
No.
Yes? Yes, Nishant?
No, sir.
No. Why? Why? So next question will be why? Why?
Two
What is it?
other shareholders, each holding 30%. They are
And also the Carmart only having the 40%. That means less than the 50%, right? So you don't have the more than 40% voting shares, and also other shareholders also having 30%. So that means
yes,
you can't control the
that company.
control the Tire Mart. That means you can't control the decisions of the Tire Mart, right? Basically, you can't control the decisions of the Tire Mart, then you don't have the control, right? Example number 4. It is kind of a difficult one, right? So most of you got, I think, wrong, right? Carmart owns 40% of the ordinary shares in Tire Mart associated with voting rights. No other contractual agreement relating to decision making are in place. Other small shareholders each hold maximum 1% in the Tire Mart. Major decisions are approved by major votes cast at relevant shareholder meetings. Small shareholders rarely attend these meetings in the past. Maximum 5% of exercisable voting right. 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 So what will happen? So you can see whether this has control or not. Yes. Anyone have any idea? So now it's getting much. Yes.
Yes, can control, sir. There is a wording here that major decisions are approved by the
Yes.
major.
Very good. Very good. Very good. That is the wording, right? Major decisions are approved by the major votes, right? Major decisions are approved by the major votes, and that question also providing some insight that other small shareholders each hold maximum of 1% in Tire Mart, and also some of the shareholders, small shareholders, not attending to the meetings, right? For example, if I am having a 1% of, I'm having a shares in the Expo Lanka Limited, right? I'm having only 2% of shares, right? What I'm doing is I'm going to the shareholders meeting and I'm sit down and enjoy their meals and all coming back, right? I can't do the, I can't influence the decision makings, right, of that company, right? So in this case, Kama owns 40% of the ordinary shares. According to our decision making criteria, which is more than 50%, we can't say this is a subsidiary company. But still, it says major decisions are approved by major votes, right? We learned that the concept of control is if we can control the decisions of that company, we call it as we are having a control over it, right? Right. So even though we don't have the more than 50%, but it says your decisions, the major decisions approved by the major votes, right? There's a high chance of possibility that karma can influence the major decisions, right? Karma can power to control the major decisions because the karma, the one who are having the major shareholdings. Because if we take other shareholders, right, the 5% of voting shares, the 5% of small shareholders are actually not attending to the meetings. Others will hold maximum of one, right? So if you want to influence the Kmart decisions, right, everyone need to get together, right? Right? It is not normally happen, right? So therefore, we can say the Kmart have the controlling power over the Tire Mart. So that means you are having the controlling power. That means you are having the parent subsidiary relationship. Parent subsidiary relationship. That means you need to prepare the consolidation accounts, right? Consolidation accounts. Is it clear? Yes. Clear to everyone? Any questions? Yes. Any questions that we have discussed till now? Any question from that we have discussed till now?
So I have a question, sir.
Yeah.
Regarding the previous chapter. I mean,
Yeah.
you are saying that 20% no more, it is an associate.
Yeah.
Yeah, if that means 1/5 of director board can appoint
Yeah.
the
Yeah.
one. Yeah.
That's correct. That's correct. Yeah.
Yeah. I have a problem with that. 4/5 of other directors ignore the my decision. Oh, I have influence to decision making, but other 4/5 of directors ignore my decision. Is it associate to normal investment?
No, that directors are not my company directors. No. So in
Yes,
this
yes,
case, what I'm doing is I'm the company A, right? I'm acquiring 20% of company B,
yes.
right?
20%. Yeah, okay.
Right. Right. So now in the company B, I'm a one director, right?
Yes, sir.
So we are having another four. Let's say D, C. Likewise, we are having
Yes,
four
sir.
directors,
Yes,
right? So so I'm only having the 20% of shares. So that
yes, sir.
means when we are doing the group accounts, right? So I'm only having an associate relationship, right? Associate relationship.
Yes, sir. Okay, sir.
Understood? Because other
Yes, sir.
shareholders buy their own shares, right?
Hmm?
It's not kind of a the sometimes you are saying that other four also
For directors,
approving my decisions now. So then
they are not approving my decision.
okay,
I have a power to influence the decision making.
right,
Only
okay,
influence.
yeah.
But other fifth directors, they are always ignore my decisions. Then what will happen to that
No,
combination?
you got wrong. No, if you are having a 20%, more than 20%, that means you are only having the power to participate with the decisions. You can't control the decisions. They
Yes,
can.
yes, okay,
Yeah,
sir. That we have power to participate,
yeah.
but other fifth directors, they are always ignore, reject my decisions. Then
Then I can't do anything because I'm only participating with the decisions. I'm saying
okay,
that this can be done. Right?
okay,
මට කියන්න පුළුවන් මේ දේ කරන්න කියලා යෝජනාවක් කරනවා. අනිත්
yes,
කටිය රිජෙක්ට් කරන්න පුළුවන්. But I am having the power to participate.
right.
Let's say I'm only having 1% of
Yeah,
shares.
that combination is associate or normal investment.
It is an associate. If you're holding more than 20%, that means you can influence, you can participate with the decisions. Let's say if you don't have more than 20%, let's say
Yeah.
I'm having only 5%,
Yes,
I
sir.
can't even participate with the decisions.
Okay, sir.
Right?
Okay, sir. Got the idea, sir.
Right? මට 100යි තියෙන කියලා දැන් 105යි තියෙන කියලා මං ගිහිල්ලා මේ ජෙනරල් AGM එකේ ඇනුවල් ජෙනරල් මීටින් ඉඳගෙන ඉඳලා කාලේ එනවා විතරයි. මට කියන්න බෑ මොකුත්. හැබැයි මට 120ට වගා තියෙනවා නම් මට මොනවා හරි කියන්න පුළුවන්. අපි මේ දේ කරොත් හොඳයි නේද? I'm participating with the decisions. Right? So others can ignore my decision. Others can reject my decisions. Right? If you're having a more than 20%, that means you are having a kind of that is kind of a norm that you are having a significant influence because you can represent the let's say 1/5 of your director board, right? Right? Got it, Nishan?
Yes, sir. Yes, sir.
Okay. Any other questions? Any other questions? Yes. you need to clear on this point, then you can easily go for the consolidation concepts, because in your questions we are beginning the question from this point, right? You need to decide whether this company is a subsidiary company or associate company, right? You got it. If you got it wrong at the beginning, your accounting treatment will be wrong. Then you will be lose all the marks, all the 30 marks or 25 marks, right? Any questions before moving to the other part? No, any questions? Great. Questions මොකුත් නැහැ කියන්නේ එක්ක හොඳටම තේරෙලා නැත්නම් මොකුත් තේරෙලා නැහැ. Right. ඔය දෙක ගන්න. Right. Any questions? No? No questions. I'm happy to answer. So this is a kind of a discussion, no? This is a kind of discussion, not a lecture. We can discuss, right? If you have any concerns, you can ask from me. Okay, right. So if you can't talk, if you are cooking, right? If you are doing some works in the home, so you can drop the questions in the chat box, right? Okay, if you have any questions, I will give you one minute. So if you have any questions, you can drop in the chat box, or you can ask directly. Because I need to clear this at this point and go for the next part. Otherwise, you will be not understood the other part. Right, seems no questions. At least tell me whether you have got my points. Yes? Yes or no? Yes? Anyone? No one is speaking. Can you hear me? Right? Can you hear me? Okay. Okay, some of you having, yeah, now it's fine. Very good. Some of you having asked the question. So what about the situation? Two parties having exact 50% of shares. Two parties having exact 50% of shares, then you need to decide whether you are having the controlling power. If you are having a controlling power, then you need to make the parent subsidiary relationship, right? In a practical scenarios, we don't have such kind of situations, right? Right. Okay. Okay. So then I'm moving to the truth number 2, right? So before moving to the truth number 2, I'm having another question, I think. Right. Right. So the next part, now we know the concept of control, right? So then if you having a control over other company, right? So that means we need to prepare the consolidated financial statement, right? අපිට අනිත් company control කරන්න පුළුවන් නම් විතරයි අපිට consolidation financial statements හදන්න අවශ්‍ය වෙන්නේ. දැන් ඔයගොල්ලෝ ඉගෙන ගත්ත විදිහට අපිට දැන් අනිත් company control කරන්න පුළුවන් වෙන අවස්ථාවලදී අපි consolidation financial statements හදනවා. We have to prepare the consolidation financial statements when we are having the controlling power over other company, right? So according to the SLFRS 10, right? So you are having the company called the parent company or holding company. You are having the subsidiary company, that means the controlling company, right? So you need to prepare the separate financial statement for the parent company as well as for the subsidiary company. And also you need to prepare the consolidation financial statement for the whole group. The responsibility of preparing the group financial statement is with the parent, right? Is with the parent, right? Right. I'm repeat it again. We are having a parent subsidiary relationship, right? Your parent can control the subsidiary company. That means you are having a group, right? Your spouse and you got married and you are having now a one entity, right? So you need to prepare one separate financial statement to your parent, one separate financial statement for the subsidiary, and also group consolidation financial statement for the group, right? The responsibility of preparing the group financial statement with the parent, right? So in this course unit, what we are learning is preparation of consolidation financial statements, right? And when we are preparing the consolidation financial statement, always make sure that you are the parent, right? හැම වෙලේම දැන් අපි consolidation ඉස්සරහට හදද්දී හැම වෙලේම ඔයා හිතන්න ඔයා තමයි parent, right? You are the parent because the responsibility of preparing the group financial statement with the parent, right? Always think that you are the parent when you are preparing the group financial statement or the consolidation financial statements, right? Some of you have asked a question regarding the example 3. Carmart owns 40% while other have 30% each. Hence, Carmart is a major shareholder. So, is it correct Carmart has control power or no control power? They don't have control power, right? So, I said no control power because it is less than 40% and there's no contractual agreement as well, and other shareholders has 30%. If other shareholders get together, then they can influence they can control the decisions, right? So therefore, in the example number 3, there's a no control, right? Is it okay, Rashini? Rushni? Yes? Yes? Okay, good. Right. So, as I mentioned before, always you think you are the parent when you are preparing the consolidated financial statement. I'm not going to prepare the separate financial statement because that is learned in your A levels, and if you are degree holders, you have learned those things. We are focusing on the consolidation financial statement, that or group accounts, right? So when you are preparing the group accounts, always you need to look at in the parent perspective, right? Parent perspective, right? You think you are the parent, right? Right. So the consolidation procedures, right? So according to the SLFRS 3, right, it says you need to follow the acquisition method. So I'm not going to discuss the terms much. Just remember you all need to follow the acquisition method, right? Acquisition method of accounting under SLFRS 3 when you are preparing the consolidation financial statements, right? I will discuss about the acquisition method in the latter part of discussion. Just for remember, you need to follow the acquisition method when you are preparing the consolidation financial statements, right? There are two methods when you are going to do the associate accounts. You need to follow the equity method. When it's come to the consolidation, you need to follow the acquisition method, right? වැඩි ඒ කියන්නේ හිතන්න එපා. දැනට මතක තියාගන්න consolidation කරද්දී අපි acquisition method එක තමයි follow කරන්නේ SLFRS 3 වලට. Right. So consolidation procedure. So first thing what we need to do is we need to identify the acquirer, right? Right. Acquirer means the parent company. For example, let's say a company buys more than, let's say, 52 shares of B, right? So you need to identify the acquirer when it's come to the consolidation procedure. Acquirer is company A or the parent company. So as I mentioned earlier, right, always you are the parent. You need to think like a parent, right? So therefore you need to identify the acquirer, right, or the parent or the holding company, right? Determine the acquisition date, right? So you need to determine the acquisition date. What is the date I am acquiring company B? Let's say I'm acquiring company B in 2023, January 1st, right? 1st of January, right? So that is my acquisition date. So you need to decide, you need to identify who is the acquirer and also the acquisition date, right? And recognize and measuring the identifiable asset acquired, the liabilities assumed, and non-controlling interest in the acquirer. So don't think about these wordings, right? I'm doing these things, non-controlling interest, or we can say in CI. I will discuss it in the third tute, right? So you need to decide what I am buying from the company B. මම මොනවද company B එකෙන් ගන්නෙ, right? You need to measure the identifiable assets and liabilities I'm acquiring, right? And you need to recognize the goodwill and the bargaining purchase, right? Goodwill and the bargaining purchase. So I will discuss these two wordings at the second tube, right? You need to decide the goodwill and the bargaining purchase. So this is the consolidation procedure, basic consolidation procedure, what we need to follow, right? What we need to follow, right? So this is another exercise that you will be having, right? This is taken from the CPA study pack, right? CPA Australia study pack. So this is not available in your tute, right? Just morning I have found this one and I have incorporated this into the tute, right? So try to answer this. Indicate which of the following acquisition represent a business combination. Select one or more options from the following list. Justify your answer for each option. Yes, try to answer this. Give you 2 minutes. What you need to do is you need to identify whether this is a business combination or not. Basically, it is a kind of a business combination or not, right? Yeah, I will explain, right? Because it's taking time now. First one, A Limited acquires inventory from B Limited on a regular basis. That is a kind of a selling, buying and selling transaction, no? Right? Normal selling transaction, right? I'm buying some inventory from the B Limited. That is not a business combination. A Limited acquires plant and equity from B Limited as a one-off transaction, right? Only they are getting a plant and equipment, right? So that is kind of a asset acquisition, right? A Limited acquires some inventory from B Limited and then sell to the C Limited and some plant and equipment that it then sells to D Limited. That is also a buying and selling thing and the asset acquisition. But the A Limited acquires the entire share capital of B Limited from its shareholders, right? So you have acquired the company, right? Share capital means you are acquiring the whole company, B Limited company. So that is the kind of a business combination you are having, right? Right. So yeah, correct. You have provided the correct answers. Yes. Okay, let's take 5 minutes break. So I will back in 10:32, right? So let's take 5 minutes break and have some tea and come back, right? For the next calculation part, we have to start for the next half an hour. I will take for that, right? So come back in 10:32, right? Right. Okay. So hope you all back, right? So let's moving on to the tute number 2. Yeah. Hope all of you can see my screen. Yes. Tute number 2. Yes or no? Can see, right? No one is there. Yeah. Okay. Thank you. Right. Thank you. Okay. Okay. Thank you. So tip number 2. So now, we learn. So now we are learning investment in subsidiaries, right? So as I mentioned before, we are going one by one. The first thing we are going to the investment in subsidiary. That means if you are having a controlling power over the entity, that means you need to prepare the consolidated statements for that company, right? For that group of company, right? So I'm just reminding, if you are having a company A and B, right? If you are having more than 50% of the company B, right? So you need to prepare a group financial statement or consolidation financial statement. So from this point onwards, we are learning how to prepare the group financial statements, right? How to prepare the group financial statements. As I clearly mentioned in the very beginning of the session, right? These every tudes interconnected, right? So I will start in the next week, the tube number 3 or 4, right? In the next week, tube number 5, 6, likewise, it is interconnected. So if you are not participate with the live lectures, definitely you need to listen to the lecture before coming to the lectures in the next week. So otherwise, you can't understand anything, right? Because it is connected to each other, right? That you need to remember, and you need to, at least if you can't live, you can't participate live, you can watch the video in the convenient time, right? But make it before the next lecture, right? දැන් මේ lectures ඔක්කොම ඉවරලා videos ටික බලන්න ගියොත් මේක කරන්න බෑ. ඒ නිසා one by one, yeah, right? The next week එද්දී ආපු නැති කට්ටිය මේ videos ටික බලලා එන්න. නැත්නම් ඊළඟ සතිය මුකුත් තේරෙන්නේ නැහැ. Right. Right. So let's start the consolidation statement of financial position, right? So as I mentioned before, I'll starting with very beginning and moving towards to the tough situations, right? Because I think some of you having no knowledge about the consolidation statement of financial statement. Some of you already have, but mostly when it's come to the accounting graduates also, they don't have thorough knowledge about the consolidation statement of financial positions, right? So therefore, I'm going very basics to the tougher part, right? Okay, let's start. So first, I'm starting from the consolidation statement of financial positions, because for the financial positions only we are having a few adjustments, right? Few major adjustments. In the P&L, it is very lesser adjustments, but most adjustments are coming to the financial positions. So therefore, I'm starting from the consolidation or consolidated statement of financial positions, right? So when it's come to the consolidated financial positions, we need to follow the line by line basis, right? So when we are discussing about the controlling power, we learn that we are having P and S, parent and subsidiary, got together and we make the group, right? Likewise, when we are doing the consolidation, we need to do the line by line adding, right? When it's come to PPE of parent company, when it's come to the subsidiary company's PPE, you need to add those two and get the group value. For example, when it's come to PPE value, right? The parent, we are having 100. Subsidiary, we are having 50. When it's come to group financial statement, we need to add these two and make it 150. So that means the combine on the line by line basis, right? Combine on a line by line basis, right? Because the group company, you do have the parent company and the subsidiary companies together, right? So therefore, you need to add line by line items, right? Add line by line items, right? The principles of consolidation statement of financial position. The basic principle of a consolidation statement of financial position is that it shows the assets and liabilities controlled by the group, not those owned by the group, right? the basic you need to remember is, right, the consolidated statement of financial position present the asset and liabilities controlled by the group, not owned by the group. Right? Right. Remember, දැන් උදාහරණයක් විදියට මම මගේ ෆයිනෑන්ෂල් ස්ටේට්මන්ට් එක හදනවා නම් මම හදන්නේ මට අයිති දේවල් දාලා. මම වෙන කෙනෙක්ගේ ඒවා දාන්නේ නැහැ. රයිට්? මට අයිති දේවල් මගේ ඇසෙට්ස්, මගේ ලෑන්ඩ් එක, මගේ කාර් එක, මගේ ගෙදර, මගේ ඇසෙට්ස්. මං කාටරි බැංකු ණයක් කරන් තිනවා ඒක මගේ liabilities. Right? So those things I have owned. Right? But when it's come to the consolidation financial statements, right, we are preparing the consolidation statement of financial statement, and it shows the asset and liabilities controlled by the group but not owned by the group. Right? ඒක අයිති වෙන්න ඕනේ නැහැ. ඔයා control කරනවා නම් ඒ assets liabilities ඔයා consolidation financial statement එකට ඒක දාගන්න ඕනේ. Right? So that is why we learn the concepts of control. If you are having the controlling power of other company, that means you can control the assets and liabilities of that company. Right? So that means you need to grab the controlling company's asset and liabilities into my group accounts. Right? Remember, you don't want to own the asset and liabilities. If you are controlling the particular assets and liabilities, then you need to consider it to the consolidation statement of financial positions. Right? Is it clear? Clear? Yes?
Yes.
Okay. So the basic procedures. The parent and subsidiary companies are deemed to be one single entity. Right? As I mentioned before, you are having the parent and subsidiary, you are having the separate financial statement for the parent company and subsidiary company, and if it is got together, we call it as group. So you need to prepare one financial statement for the group of company. Right? We called it as a single entity within the group. Right? These two P and S, or the parent and subsidiary, become a single entity within the group. Right? The assets and liabilities and the equity accounts of the both companies should be reopened in the group ledger. Right? So these things you need to reopen. I will explain when we are doing the calculations. Right? In addition to this, you need to prepare one account which is some of you are not aware, or some of you already know. Cost of control account, very important. When you are preparing the consolidation accounts, this cost of control account you need to open. Right? You need to open. In this cost of control account, we are calculating the goodwill or the bargaining purchase. Right? Right? Cost of control. What do you mean by the cost of control? What do you mean by this account? The cost of control, basically, when you're looking at the name, it's provide the definition, cost of control. So here, what we are doing is, we are going to acquire this S, or we are going to take the control of this X. Right? So when P is going to take the control of this S, right, what P need to do? P need to bear some cost. Right? Take this control. Control at the end, right? We have to bear some cost. Right? So the calculation of this cost we are using to calculate this cost, we are using the account called cost of control, or we can mention it as COC, cost of control. To acquire the control, what kind of cost we incurred, we mentioned that in the cost of control account. Right? So that we call it as cost of control account in the consolidation process. Right? It is very important account. Right? In our examination, this cost of control account will get 5 to 10 marks. Right? That is very important account. Right? And the fourth point, the group consolidated statement of financial position is prepared by a consolidated assets and liabilities on line by line basis. As I mentioned before, you need to add assets and liabilities in a line by line basis. Right? So this is the basic procedures. I know when you are when you're looking at the wordings, you can't understand the concept, right? So let's do some workings, right? So test number 1, right? Statement of financial positions of A Limited and B Limited on 31st December 2023 are as follows, right? So the financial position of the separate entities is given, right? So you are having the non-current assets, investment and current assets, equity liability, equity ordinary shares, return earnings, current liabilities, those things, right? And it says A Limited acquire all the shares of shares in B Limited on 31st December 2023. Prepare the consolidation statement of financial position as at 31st December 2023. What happened here is, right? What happened here is A Limited acquire 100% of shares of B, right? B Limited එකේ තියෙන ඔක්කොම shares ටික A Limited මිලදී අරගෙන තියෙනවා 100% shares, right? Now what we need to do? We need to prepare the group accounts for companies, group accounts, right? So we need to follow the guidelines, right? The first thing what we need to do is you can do the line by line item adding, right? Here A Limited has 60, B Limited has 50. So we consider these two companies as a single entity. That means the group, right? So the value is 110. 50 plus, 60 plus 50, 110, right? So then we are having the investment in B Limited. That means to acquire this 100%, you spend 50,000. You spend 50,000. To acquire this 100% in the B Limited, you spend 50,000, right? So then what we need to do? We need to prepare the cost of control account. Cost of control account, right? Cost of control account, right? Cost of control account, right? Cost of control account. And we are having the investment accounts, right? We are having the share capital account, and we are having the return earnings account, right? Return earnings account. So investment account, we are having in the A Limited investment account, we are having 50, right? We are having 50, right? Now we are going to calculate the cost we are allocated to get the 100% of the company B, right? Company B එකේ shares 100% ගන්න මට කොච්චර cost එක ගිහිල්ලා තියෙනවද, right? කොච්චර cost එක ගිහිල්ලා තියෙනවද, right? So I have invested 50,000. So that means you need to credit 50,000 here, and you need to debit this 50,000 to cost of control account, right? So now I am going to calculate the cost, right? So therefore I close this investment account. Now I am having the debit balance. I credit 50,000 and debit it to the cost of control. I'm transfer it to the cost of control account, right? So by investing this 50,000, what I am getting? I am getting the net assets, right? I'm getting the net assets of the B Limited, right? So what are the next net assets I'm having? I'm having equity capital of 40,000 in the B Limited, right? Because I am buying the B Limited now. And return earnings, I'm having 10, right? These are the net assets I am having. So I think you know the how we can calculate the net assets. Basically, the net assets are the equity, right? After deducting all the assets from the liabilities, the remaining balance we call it as net assets, right? Asset and liabilities අඩු කරාම ඉතුරුන ගන්න තමයි net assets කියන්නේ, right? එතකොට අපි කම්පැනි මිලදී ගන්නවා, අපි මිලදී ගන්න මේ කම්පැනි net assets ගන්න, right? එතකොට අපි 50,000ක් දීලා අපි net assets තමයි අරන් තියෙන්නේ, right? We are getting a net assets, right? So now I am having the investment amount, then so I need to get the invested values, right? Return earnings, I am debit to the return earnings, and I am credit the return earnings to the cost of control. Then my return earnings account is closed. And also the same thing, share capital, I am debit it to the share capital account and credit it to the cost of control account, and my share capital account is closed, right? So now you can see I have invested 50,000 to acquire 50,000 worth of net assets, 50,000 worth of net assets. So then the investment account is no longer there, right? Because I have transferred it to the cost of control account, and the current assets, it is 80,000, right? And equity, now the 40,000 is not there because I have transferred it to the cost of control account. So only 100,000 is there, right? Return earnings, 10% is no longer there, only 30 is there, right? And this is 60. Something happened to this, right? Right. 30 and current liabilities is 60, right? Now my account is balanced. The group account is balanced 190. 190. Right? Right. Any questions? Any questions? So I'm starting from very basics. Any questions? So I have invested 50,000 and I'm acquiring 50,000 worth of net assets. Right? So then this account also costs 50 balance. This is, if I am balance this 50 and 50. Right. Any questions? Any questions? You got my points?
Sir, when we are considering net assets, we are not considering current liabilities and current assets?
No, because net assets is after deducting the assets from the liabilities, the balancing part. Right? Net asset means what? After deducting all the assets from the liabilities, right? So then you are getting the net assets. Right? Clear?
Yes, sir. Thank you.
So you can say, for example, let's say 50 and 40, 90, right? If you deduct this 40, then 50 is coming, right? Clear?
Yes,
Yes.
sir. Clear. Yes, sir.
Any questions? Any other questions? All clear? Yes or no? So if investment is not equal to the return earnings and share capital, yeah, that will come. I will come to that point, right? Wait, right? අර කියන හොඳ ඕන සෙල්ලම් එළියෙන ජාමෙට කියලා පොඩ්ඩක් ඉන්න. right? ඉස්සලා හිමීට පටන් ගන්නවා. So I will explain it. For this question, any questions? Any concerns? No, right? Everything okay? Everything is fine. Can move to the next one. Yes or no?
Yes, sir.
Okay, good. I'm having another one question. Okay, cool. Right. So then the question one of you have asked, right? So I'm going to answer that question now, right? The goodwill arising on consolidation, right? So what do you mean by the goodwill? Yes, anyone knows what do you mean by the goodwill? Goodwill can what? Why we are having goodwill? Yes. How we are having goodwill?
Value of the reputation, sir.
Yeah, through a reputation. There is one way. So when it's coming to the accounting, right? So there's an inherent limitation of the accounting, right? So some of the major parts we can't record it under accounting. That is actually kind of a discussion point nowadays. When it's come to the some companies, some important things we can't record under financial statements. So what are the such kind of things? If you know anything, we can't record under financials, but it is very important to the company.
Brand value, sir.
Skills of the employees.
Yes, very correct. Skills of the employee, because we are providing so much of training and we are generating good skills to the our employees, but still we can't record it under the financials, right? So that is one thing. The intellectual capital, we can say, right? Intellectual capital, we can't record it under financials. And also, you have said another thing.
Brand value.
Yes. Basically, when we are generating internally generated brand value, we can't record it under. If you are having a brand value internally generated, right, we can't record it under financial statement. Right? Yes. Any other things? Yes. Intangible values. Yes. Count paid more than the company. Okay. Yes. Any other things? Think and say. For example, some kind of a location benefits, right? For example, we are having a, let's say I'm having a pharmacy near to the hospital, right? The location benefits. So we can't record it in the financials. I'm having a pharmacy near the hospital. So then there's a kind of a location benefits, no? Other than the pharmacies near the town, right? The location benefits. And also we are having a customer base. If you're having a good customer base, right? If you're having a good customer base, we can't value it, right? And when it's come to the, let's say the company called WhatsApp. So you know there's a company called WhatsApp, no? Everyone have the WhatsApp accounts, no? So there's a company. Oh, that's WhatsApp, the Meta, right? So in that company, what is the major assets? What kind of assets they are having? Very limited assets they are having, but their major asset is data, right? So they know everyone's data. So if I'm chatting with someone, they know actually, right? They have the data about myself, right? Right. If I'm search something and go for the Facebook, then the Facebook appear what I'm searching, right? Because they are looking at our messages. They have the data, right? So data we can't record it under financials, right? We can't value, right? So those are the concerns, right? So when we are consolidating another company, having those kind of benefits, which is not recorded under the financials, right? Because of those benefits, we are paying a higher amount than the net asset value, right? Higher amount than the net asset value, right? So I'm having another thing. Yes, future potentials. Yes, very good, very correct, right? So if we are having a future potential, right? Future benefits, right? So that will increase the value of the company, right? So the goodwill is, right? Goodwill is the difference between the cost of investment and the fair value of the net assets acquired, right? Right? Fair value of net assets acquired, right? For example, let's say I'm going to buy the Sunlight, right? The brand called Sunlight. Actually, that brand is coming from the Unilever company, right? Right? So the net assets of the Sunlight, let's say net asset of the Sunlight is 100, right? Actual value, right? But they are having a customer base, they are having some sort of other benefits, right? So therefore, the actual net assets value is more than this. Let's say it is value 200. So I'm paying to acquire this 100 net assets. I'm paying how much? I'm paying 200. Right? So that means I'm getting a goodwill value of 100. I'm paying much. I'm paying more than the value of net assets to acquire that company, that more value I'm paying, we call it as goodwill, right? Right? We call it as goodwill, right? So goodwill is equal to aggregate of consideration, or we can call it as purchase consideration, right? Purchase consideration in the sense we can purchase the shares of the company by using cash, by using share exchange, right? By using other sort of ways, right? Those things come into the purchase consideration. I will discuss it in the latter part of discussion, but in this point, you just remember purchase consideration minus net assets. If there is a difference, right? If there is a difference, then we call it as a goodwill, right? I'm paying more than the value of the net assets, then it call it as goodwill, right? Goodwill will arise because some of the things we have discussed, like the brand name, the customer base, the skills of the employees, intellectual capital, the location, right? Likewise, the goodwill may be arise, right? So this goodwill, we call it as externally generated goodwills, right? Externally generated goodwills, right? And therefore, you need to recognize this goodwill in the consolidation financial statement as an asset, right? You need to recognize as an asset, right? Because this is an externally generated goodwill. When I'm going to buy this company, I need to value this goodwill, right? And also you need to remember that goodwill acquired in the business combination shall not be amortized. Instead, what we need to do, we need to impair annually, right? According to the LKS 36, according to the impairment test, you need to impair the goodwill annually. Or you need to test the goodwill to the impairment annually, right? According to the impairment of assets, right? That we will discuss in the latter part of the discussion. For now only, just remember that you need to identify the externally generated goodwill in your financial statement as an asset, right? And also you need to test for the impairment annually for this goodwill, right? And it is not amortized, right? Right? Is it clear? Yes? Clear?
Yes, sir.
Okay. So let's see whether it is clear or not, right? Okay. So now we are having a P and S Limited, right? And P Limited acquire all the ordinary shares of S Limited on 31st December 2023, prepare the consolidation statement of financial position. In this case also, P Limited acquire 100% of S Limited, right? So now what we need to do, P Limited have the control over the S Limited. That means we need to prepare the group accounts or the consolidated accounts. So let's see group accounts, right? So line by line item, because P and S become a one entity. That means you need to sum up these values, because as we learn in the group accounts, we are mentioning the assets not owned by the group but controlled by the group, right? So if you can control this limited, that means that asset value is also we need to include under group, right? So therefore 90 plus 100, 190, right? So investment, I will take it there, 50 and 30, 80, and 30 plus 10, it is 40, right? So now I'm going to, just I'm having a, right. Then, so I have to prepare the cost of control account, right? Every time I need to prepare the cost of control account when it's coming to consolidation, right? So I'm having the investment is 210, right? I'm having the share capital 100, and I'm having the return earnings 20, right? So I credit the investment to 10 to the cost of control account to 10, and I am debit the return earnings and credit to the cost of control account, and debit the share capital 100 and credit to the cost of control account, right? So then you can see there's a difference, right? I have invested 210 to acquire 120 worth of net assets, right? 120 worth of net assets. So if I'm balancing these numbers, right? So there is a difference of 90, right? Difference of 90. So this 90, we call it as the goodwill, right? The goodwill, right? So we need to identify this goodwill under the assets, right? So we can say, I will remove this and I will say goodwill, it is 90, right? So now 210 account is gone and 100 is gone, 120 is gone and 200 and 120, right? So if I balance these numbers, how much? 360, right? So 360. This is also 360, right? Is it correct? Yes. I hope so. Right. So I have balanced the group accounts 360 and 360, right? Any questions? Any questions regarding this? Is it clear?
Yes.
Clear.
Yes, sir.
Others? Right. Great. Right. If you have any questions, you can ask. I will give you 2 minutes. Please clear from this point onwards. So otherwise, the hard part is coming up, right? So then I can't explain this again and again, right? Right. What is the basic is there is, if you are investing more than the value of net assets, we need to identify it as a goodwill, right? So internally generated goodwill, we are not recognizing the financial statement, but externally generated goodwills, we are recognizing the financial statements. And also we need to remember that this goodwill, we need to annually test for the impairment under LKS 36, right? So that is also you need to remember when you are preparing the consolidation statement of financial positions, right? Because that adjustments will give in your examination, right? Right. I hope you all understood the concept, right? No issues, right? Everything is okay. If you have any issues, you can put it into the chat box. Okay. So, okay. Get another one. So, if investment is less than the return earnings on the chart, just I'm coming up to that is the next part, right? Right. You all are good, huh? You're forecasting what I'm doing in the next, right? Any other questions? When it's come to this question, don't think other aspects. Just when you're looking at this question, if you have any questions, you can ask. Okay, test number 3, right? Test number 3, right? So do this. I will give you 10 minutes, 5 minutes, yeah, 5 minutes. Please try to do this. So here also, the Y limited acquire 100% of X, right? 100% of X, right? So that means you can do the group accounts. You have to do the group accounts. 135, 150 means 285, right? And 75, 90 is 165, is 185. Then 160, right? So you are having the invest cost. You need to create the cost of control account. You are having the investment account 400. So I'm getting this 400 into the cost of control account, and I'm having the share capital of 150. I'm getting this 150 into cost of control account, and return earnings is 60. I'm getting this 60 into this, right? And I'm having 210, and the investment is 400. So I'm balancing the cost of control account 400, 400, 190 is the goodwill, right? So I will get the goodwill here, 190, right? I'm having the equity shares of 300. The return earnings is 180. Then I'm having the balance will be when your balance is 4, 5, 6, right? 640, I think it's correct, right? Same as the previous one, right? Got it? Any questions? Right? Just to learn the concept, right? Any issues? No issues, right? We can move, right? Yes? All fine? Yes or no? Tell me. Any concerns? Can we move?
Yes.
Okay. Right. So then the next part, one of you have asked about the, he asks if you are investing less than the net assets of the company, then you are having the bargaining purchase, right? We call it as profit on bargaining purchase or the gain on bargaining purchase, right? So what is the situation where the bargaining purchase arise is I'm investing less than the value of the net assets, right? For example, let's say my net asset value is 100. I'm only investing 80, right? Bargain කරනවා again, right? ඇත්තටම දැන් අපි අර ඔය අපි තෙතා මාකට් එකට ගියාම right? එතකොට කියන්නේ මේක 500යි කියනවා 500ට වැඩි කියනවා ඊට පස්සේ 300ට දෙනවා, right? So we are bargaining, right? Bargaining and purchase, right? So if you are doing a bargaining purchase, right, that means it creates an income to us, right? It creates to income to us because when you are looking at the net assets of that the company or the subsidiary company, it in the market it is worth of 100,000, right? You can sell this asset for 100, but I'm purchasing it for 80, right? That means I'm having a profit of 20, right? I'm having a profit of 20. So that we call it as gain on bargaining purchase, or we call it as negative goodwill. So better to use the profit on bargaining purchase or the gain on bargaining purchase, not call it as a negative goodwill, but we can call it as a negative goodwill as well. It is a kind of a negative goodwill, right? For example, sometimes because of some brand damages, right? Actually, the net asset is this, but because of this brand is damaged, the value of the company will goes down. So what are the situation can the company's value will goes down? What are the situations? What kind of situations? What kind of situation we can bargain when you're acquiring something? Yes,
Reduce the price.
reduce the price. Can be. Now I'm asking when it's come to broader level, right? I'm going to buy a company, right? I'm going to buy a company, then I'm going to bargain the value. Actually, the company value is 100, but I am asking from that company owner, I'm only buying this company for 80. So what are the situation?
Profit.
Yeah. So if it is a loss-making company, we can bargain, right? Very good. Loss-making company, yeah. That's one thing. Yes. What are the other aspects? So for example, I can't bargain when I'm going to buy let's say I'm going to buy a JK group, JK company, or let's say I'm going to buy the Cinnamon Lakeside hotel, right? Right. So I'm going and telling that I buy this for this much, right? So I can't bargain because they are actually doing well, right? So if I can bargain, that means that company have some kind of a issues, right? Some kind of for example, let's say they are loss making company. They are having some issues with the regulators, right? Regulatory issues they are having, right? They are having some brand damages, right? They have issued some chemicals, right? Those chemicals having some troubles to the customers, right? Or they have, for example, in recent past, the Coca-Cola company released the wastewater into the Kalni River, right? And the customers not very happy with that work, right? So then they are refused to take the Coca-Cola, right? So the value of the company goes down. Actual value is this much, but the actual market value goes down, right? So then I can bargain, right? So if I am getting the higher net assets value by investing lower value, then we are generating the gain on bargaining purchase. Or we can say profit on bargaining purchase. So also we can say the negative goodwill, right? Negative goodwill, right? Right. So when we are having the negative goodwill, where we need to identify this negative goodwill? Where we need to identify? Yes, think and say where we need to identify the negative goodwill or the gain on bargaining purchase. Is it we need to identify under assets, liabilities, equity, or as a yes?
Assets.
So negative goodwill is the income, right? Because I'm having a 20%, 20,000 of income. So we need to identify it as a other income, right? In the financial portion, we need to add it to the equity value, right? We know when you are preparing the P&L, we are having other income, no? So the P&L final balance profit bill, we are getting it to the equity, right? Likewise, if you are preparing the financial portion only, we need to add up at the bargaining purchase value to the equity, right? Otherwise, if you are preparing the P&L also, then you need to mention it under other income because it is an income to us, right? It is a income to us. Clear? Goodwill, you need to recognize under asset. Gain on bargaining purchase, you need to recognize under other income in the P&L and you need to add up it to the equity. Right? If you are not prepared in the P&L, you need to add it to the equity value under in the financial position. Right? Clear? Is it clear? Yes?
Yes.
Yes, sir.
Okay. So let's do this question. Oh, it's gone down like this. I'll take it. Right. Let's look at this, right? A Limited acquire all the ordinary shares of B Limited, right? So A Limited acquire all the shares in B Limited, right? So A acquired all the shares in B, 100%. So we need to prepare the consolidation, right? We need to prepare the consolidation. So property, plant and equipment, very easy, 190, right? Investment in as a B Limited, I will come back to it. 180 is the value of this, and the current liability, it is 40, right? It is 40. So I will take this to here, 190, 180, and 40, right? So now I'm going to prepare the cost of control account, cost of control, and I'm having the share capital account, and I'm having the return earning accounts. Return earning accounts. The share capital account, we are having 120, right? And the investment account, we are having 110, right? So I have transfers this investment amount to the cost of control account and share capital amount to the cost of control account and return earnings to the cost of control account, right? So now my asset value is 120, but I'm investing only 110. So that means I'm having a income or the gain on bargaining purchase, right? Gain on bargaining purchase. So therefore, I need to incorporate this under other income in the P&L. That means at the end of the day, that other income balance will come to the return earnings. So therefore, I need to sum up this 10 to the return earnings balance, right? Then my return earnings will be 130 and the share capital will be 200 and this is 40. And this will balance 370, right? 370. Right? Is it clear? මෙතනින් ආපු bargaining purchase එක මම හරිනම් අපි recognize අපි P&L එක දැන් prepare කරන්නේ නැති නිසා P&L එක prepare කරනවා නම් other income යටතේ recognize කරන්න ඕන. right? අපි P&L එක prepare කරන්නේ නැති නිසා P&L එකෙන් එන ලාභය නැත්නම් අපි P&L එකෙන් එන profit එක හරි loss එක හරි return earnings වලටනේ ගලපන්නේ. right? We are just into the return earnings. So therefore that increment in the return earnings balance you need to adapt to the return earnings. Right? Remember, if there is a goodwill on the acquisition, right? Goodwill on the acquisition, you need to recognize in the asset. If it is a gain on bargaining purchase in the acquisition, you need to recognize by adding up it to the return earnings. Else, if you are preparing the P&L, you need to recognize in the under the other income, right? Other income, right? Other income. Clear? Is it clear? Yes. Okay. So the next question in your examination, the examiner can ask, what are the double entries for the goodwill? When it comes to the consolidation, what are the double entries for the goodwill? Yes. So we are having the investment debit, right? Investment debit, and you are having the share capital credit, right? And you are having the equity or the return earnings credit in the cost of control account, and you are having the goodwill credit in the cost of control account, right? Then you need to debit this cost of goodwill into the asset, right? Right. So this is the double entries in the cost of control account, right? Cost of control account, right? Cost of control credit and goodwill debit, right? Cost of control credit and goodwill debit, right? So this is how you need to recognize the goodwill, right? Right. I hope you all got some sort of idea, right? So any questions which we have discussed till now? We have completed the tute number 2 as well. Any questions? So I'm start with very basics, and I'm going going some of the top situations. So in the next tute, I will discuss about the proportion parts, right? Because in here we always think P Limited acquire 100% of S, but in the practical scenarios, most of the time P Limited are not, for example, when it comes to a particular company, that company not acquiring 100%, right? they are only acquiring 80%, 70%, 60%. So such kind of situation, there is a item called non-controlling interest is arising, right? Non-controlling interest is arising. So, right, that part I will discuss in the tute number 3, right? So before that, any concerns about the goodwill and the bargaining purchase which we have discussed? Yes. Any questions? All clear? All clear. Very good. Okay. So I'm only having, I think, 30 minutes, right? So uh, let's say, so if I'm start the next tute, I think it is the time is not enough to complete it, right? So therefore, I will take it to the next week, right? So before winding up, I will summarize the things which I have discussed with you, right? First of all, I have discussed the concept of the investment, how you need to decide the investment when it comes to consolidation, and what type of investment you need to look at, and what are the standards: LKS 20, LKS 28, 27, SLFRS 3, SLFRS 10, and SLFRS 12 for the disclosures, right? And the joint ventures SLFRS 11, right? What are the standards we are going to learn, and then what are the kind of investment we need to incorporate: the investment in associate, the joint arrangements, and the investment in subsidiary and other investments. And when it's come to the investment in subsidiary, and when it's come to the investment in associate, how we decide the associate relationship with the significant influence. Significant influence is we are participating with the policy making decisions, right? And then I will discuss about the investment in subsidiary, how we are deciding the investment in subsidiary by looking at the concepts of control. If we are own more than 50% of shares, and other few factors we are considering, if you are having a controlling power to control the decisions, financial and operating decisions of that company, we call it as that company is as our subsidiary company. And if we are having a parent subsidiary company relationship, we need to prepare the group company accounts or the consolidation financial statements. So under consolidation financial statement, what we need to do is we need to firstly identify the acquirer, and we need to recognize the acquisition date, and we need to identify the net assets, and we need to recognize the goodwill and the bargaining purchase. So under the bargaining or under the goodwill, we have recognized that goodwill is the higher value we are paying to the net assets, right? Basically, the few reasons are there for because we are paying high value more than the net asset value. So we have discussed those reasons. And if we are identifying the externally generated goodwill, we need to impair it annually, right, under LKS 36, and also it will recognize it as a asset in the financial statements. And when it comes to bargaining purchase, you need to bargaining purchase means the lower value we are paying to acquire the net assets, right? The lower value than the net asset value, the actual net asset value, we are paying lower value to acquire those net assets. We call it as bargaining purchase. So it's kind of a profit for us, right? Because we are acquiring 100 worth of assets for 80, right? Right. So then it will create a 20 of gain to myself or the company. So therefore, we call it as gain on bargaining purchase, or the negative goodwill, or profit on bargaining purchase. So we need to recognize the profit on bargaining purchase under other income, and under other income in the P&L. If we don't prepare the P&L, we need to adapt it to the return earning, right? This is what I have discussed throughout these 2.5 hours, right? So I try to summarize all the things I have discussed. I start from this simple point, and I'm dragging this to kind of a tough situation, right? right? So therefore, as I mentioned before, you need to at least listen to these lectures before coming to the next week's session, right? If you actively participate or you are work with me, then no need to do it. But if you are not participate with the live lectures, or if you are going to listen this, don't wait till the end, right? If you are not getting anything understood, then you can't do the consolidation, right? You will be lose 30 marks and you will be definitely fail the exam, right? So therefore, do the works. You can work with me on weekly basis. If you are following the live lectures, or you only want to allocate some 40 minutes or 50 minutes per week to do the rest. So I will upload um, some exercises, right? So you can do on your own, your home, and try uh, check whether you understood the concepts very clearly. I will upload the PowerPoint slides, right? So you can work on these questions and see whether you have understood the concepts, right? So that is how I'm going to cover up all these consolidation concepts, right? So if you not understood anything, you can ask from me. You can drop me emails, then I will definitely reply to you all, right? So with that note, let's wind up the session. Before winding up the session, if you have any questions, you can ask. If you have any questions, any comments, you can give. If this is not uh, enough to you, or it is very simple to you, then I can make it advanced, right? If you want, right? So those kind of suggestions are welcome, right? Any questions, any concerns, any suggestions? Yes. No suggestions, no questions, no concerns. Everything is clear? Everything is clear? At least tell me everything is clear or not.
Sir, this goodwill calculation, it is only at the first year, right? At the time of after the investment?
At the time of acquisition. At the time of acquisition date.
So the following years, this goodwill calculation will not be there. We have to simply carry out the amount. Correct?
Not simply carry out the amount. You have to impair. You need to test for the impairment of this goodwill.
Yeah.
For example, let's say I'm having a goodwill of 100,000 today because at the acquisition date, but in the next year, right? For example, let's say sunlight, right? So I have acquired the sunlight, right? So then I have acquired the sunlight and I generated a goodwill of 100,000, right? But in the next year, what will happen is the sunlight custom base get decreased because of some sort of chemical kind of a thing happen to the customers, right? The custom base is decline, right? Decrease. So therefore, my goodwill is decreased because of the external indicators under LKS 36, right? So you need to check the goodwill impairment every year, right? You need to check the goodwill for the impairment every year and check whether the amount is correct, right? Every year, the goodwill will be increased or decreased.
So that means we want to maintain our goodwill until the disposal of the
yes, correct.
subsidiary.
Disposal of your company. Let's say in this case the S Limited. If you are going to dispose this S Limited, then only you need to get out the goodwill. Until then, you need to check for the impairment annually. That is a requirement under LKS 36.
Sir, another thing is why we are not taking the internal generated goodwill? Is a valuation problem or?
Yeah, basically the valuation problem. Because I can't say how I can measure the custom value, let's say custom base value, how I can measure.
Sir, if it is value third party valuer, qualified valuer, can we take
internally generated under accounting concepts? We can't value the internally generated goodwill under the standards, right? Only thing we can do when we are doing the consolidation, the practical scenarios, what will happen is when I'm going to buy a company, right, I'm asking the valuer to value that company. right? මම දැන් සාමාන්‍ය කම්පැනියක් ගන්න මිලදී ගන්න ගියාන් පස්සේ මම නිකන් ගිහලා ගන්න නෑනේ. මම කම්පැනි මිලදී ගන්න වැලියුවට කියන වැලියු කරන්න කියලා. වැලියු කරලා තමයි මම ඒ ගාන පේ කරන්නේ. Right? That is the practical scenario. Right? So when we are valuing that amount, we can take it as a externally generated goodwill and to the accounts. But when it's come to the internally generated goodwill, we can't value actually because it is biased, no? Right? So if you want to generate high profit, we can use the internally generated goodwill. So therefore, in the accounting perspective, we are not taking the internal generated goodwill if it is valued by someone, right? That is the concept, right? Basic is we can't actually value that way. But nowadays, the discussion point is actually we need to take that value to our financials. Otherwise, the financial misrepresent the actual value. For example, when you're looking at the WhatsApp company, right? For example, when you're looking at the WhatsApp company, the data is the most valuable item, most valuable assets in their asset balance sheet. But they don't have that value in their asset, the balance sheets. That is the issue. But nowadays, they are actually discussing that. And also, for example, the SLFR 16, the leases is coming up because of that reason. Why the SLFR 16 is coming up, right? So I will take a few minutes to explain that, right? So SLFR 16 is a standard. Why we are implementing that is there's a concern in the American company, right? That American company having the aeroplane company, right? So they are having all the aeroplanes in the lease basis, right? They are getting these assets, the aeroplanes for the leases, right? Leases. So under LKS 70, that is the previous standard, right? What we can do is when we are having the operating lease, just what we are doing is we are debiting the expense amount or the rental amount to the PNL, right? And we are keeping that assets when it's come to the operating lease. Under LKS 17, we are having operating leases and the financial leases. Financial leases, we are debiting the expenses or the rental amount to the PNL, right? PNL. That's what happened, right? So when we're looking at the balance sheet of this aeroplane company in America, right? Under the assets, right? They are having a lower amount, right? But when you're looking at the profit, they are having a higher number of profit. Let's say 10,000. They are only having 100 assets and they are generating 10,000 profit. So when you are looking at these values, if I'm a decision maker, we are looking at the values. Yeah, I will see this company is actually performing well because they are using only 100 worth of assets and they are generating 10,000 worth of profit. It is good, right? Right? Because I'm having only 100 assets and I'm generating so much of profit, right? That is misrepresentation of your financial. That is why the International Accounting Standard Board coming up with the SLFR 16. So that is the reason. So that is now there is no financial and operating leases, and you need to recognize if you are having a lease asset, you need to recognize it is under asset as a right of use asset. Right. So that is the reason. Right. So accounting will every time it is changing. Right now, the environmental aspects also coming now. FS1 and FS2. Right. So therefore, it will change. Right. Good question. Right. Thank you. Any other questions? You got my point, right? Nishant?
Yes, sir. Yes, sir.
Right. Some of you have a question asked about. Say the question. There's a question, wait. So I have one question. Suppose if some company has 40% voting shares and he can take major decisions of the business as well. So can we name that company as a parent company, or if we can use word parent, should company be having more than 50% of share? No, it is parent, right? So the parent-subsidiary relationship is arise if you have the control over another company, then you will become a parent of that company, right? The 40% and the 50%, more than 50% is just a norm, right? If you are on only 40%, but you are having the ability to control the decisions, so then you will become a parent, right? Right. There's no requirement to having more than 50% to call you as a parent, right? Right. If you can control the decisions of that company, then you will become a parent of that company. That's the only thing, right? If you can control the decisions, right? Remember control. The word control is the very important, right? Is it clear? One who asked the question, what is the name? The Kasturi Ratna. Yes, is it clear? Okay. Okay then. So if you don't have any questions, if you have any questions, you can drop me an email. Then I will definitely reply you. So let's wind up the session now. For next week, I will continue with the tude number 3, and I will upload the tudes before the lecture, so you can go through with the tudes and come with some additional knowledge. So we can have some sort of a good discussion then, right? So thank you very much for participating and engaging, and let's meet on next week. Have a good day. Thank you.